What's going on, guys? Pat here. Hey, today is July 11th, 2024, and just doing a little market review. As you can see here, today's CPI day, 5:30 a.m. Pacific time. We had a big CPI pump up. This is the 1 minute chart. NASDAQ 100, and overnight we had this accumulation. We had this manipulation move up, and then distribution on down throughout the day. We left the PM low from yesterday. We left the Asia low, equal lows from yesterday, and then we had the London low, which was swept just before CPI came out. Let's check out the chart here. So I came in right around, I was just a little bit before 6:30 and was watching this kind of choppy price action here, and I was watching this fair value gap here get inversed. So that sort of gave me a bearish bias on the day. Plus, this looked like a manipulation move up. And then we had these possible targets down below. So I was looking for them to be hit. Um, First trade today, if you're really looking for those to be hit, we did a 1 minute inverse right here. This red line right here, that's a new day opening gap, and we kind of respected it right there and then pushed through it. So this 1 minute inverse right here could have got in right there. Risk on this, about 15 points risk for close to 9 points reward. You had to go down about 15 points reward, which may have worked out. It looks like you would have got 14 points out of it. I wasn't really interested in that one at the time, as we were just kind of chopping right here, and it looked like yeah, I didn't. Actually, that's not a singular fair value gap, so I didn't really like that one. So I skipped that one. And the market kind of chopped after the open. And then you had uh, you had this sweep of liquidity up, and then this 1 minute inverse right here. This would have actually been a really good trade. I wasn't looking at the chart at the time, but if you would have entered right here on the close of this bar, maybe stop somewhere up there. And here's your 1-to-1 right here. That would have easily made you 20 points if you went for that one. Um, we've been so bullish lately though, and I've been seeing these manipulation moves down that get reversed. And so this morning, the first trade I actually took was an inverse of this 1 minute fair value gap. One of my favorite trades to take is when I see these session lows taken out and get reversed with an inverse of a fair value gap. Oftentimes it goes up to the next internal high, and that's what Dodgy teaches over at Dodgy's Dungeons. So I recommend you go check him out. That's who taught me the inversion fair value gap, and that's the model I use. But at any rate, I did enter this trade. I entered it on my phone. I did not see the risk here. So really, I mean, you're risking like 27 points on this. And the other thing I didn't see on my phone is we actually took out that internal high. So this wasn't a great trade just because it wasn't really good risk, and then it wasn't really good management on my part because once it hit that internal high, I should have went and stopped to break even. And anyway, it ended up going against me, and I actually stopped out. I actually stopped out on the inverse of this 1 minute right here. And the reason I did that is because we swept liquidity there, delivered from a fair value gap, and started inversing this one right here, which means we could be going to other lows if this was in fact a manipulation move up, and we are going to take out some of these targets that the market has been leaving. And you can see like I mark out all the session highs and lows. You can see they all got nailed today almost in one fell swoop. So that was my first trade. My second trade, shouldn't have really done this one, but I saw I saw us I saw us start to prices start to respect this fair value gap right here, this inversion. And so I tried again right there and looked for a target breaking that high, but no such luck. And I ended up stopping out of there. And that was actually a max loss day for me on my PA account and on my a couple of evals. My max loss on those is about 350 a day, so not good. And of course, the market just down. Took out the lunch low from the other day. Took out the AM low, the London low, and then here's a little bit of FOMO. And then, like I said, my signature move is looking for these previous session lows to be taken out and reversed. And so I looked at this 1 minute inverse right here. Usually, I like to have a single fair value gap and a leg down. Obviously, this one doesn't have a single fair value gap, so I long this one at first on my demo account, looking for a trade to right about here. And this fair value gap would have been 19 points right there, and I would have taken it out at about 10 points, but no such luck. Stopped out on there. And I saw, well, this looks like a two-legged pullback with with an inversion right here. And so I did enter on that one, and I got to stop out again. Enter on that one, and I got to stop out again. Actually, that's not true. I entered on this one, and I decided, I'm going to make it all back, and I'm going to just shoot for this low down here, 34 points. We took out the internal low, and then I moved stop to break even, and then I got hit at a break even stop. Could have made, yeah, I mean, could have made like 15 points on this one and sold it, which is one of the things I'm really trying to work on is having reasonable targets. I've got a pretty good demo equity curve right now, and the way I got that is by taking profits at 10 or 12 points and then using runners to go for larger targets. So today I just did one single mini and I was looking for a big target and ended up getting stopped out. And then after that, we came back and we retested the inversion. And so I took a short outside the model and that one got stopped out. Not because it not because it let's see. Oh yeah, you had this other one down here. Not because you actually closed above it, because obviously it didn't close above it, but because I was kind of FOMOing at that point, and that's when I said I would shut down my demo account for the day. So that's kind of a blow to that equity curve. I ended up losing, I don't know, between today and the last couple of days, I've lost about on my demo account, I would say close to oh, 10% of my earnings, and so that's not super good. Then I just watch the market here. There was a 3 minute, was that 3 minute right here. So market moved down, market moved down. We took out the PM low, took out the lunch low, took out the AM low, took out the London low from the other day, and then reversed. And then there was this 3 minute right here. These ones hit so many times, and so this one I actually didn't trade, but I tape read it, and this one would have failed. When that one fails, it just means we're really, really, really bearish. So you see, we're taking out all these session lows, AM lows, line lows, Asia low, lunch low from days and days and days ago, and then we get down to lunchtime. Lunchtime, I didn't trade. There was a decent uh, this one was actually pretty decent. We had a 3 minute we had a 3 minute version right there. It was actually 5 minute too. It was a 5 minute version right there because this meets the criteria of you took out all these session lows and then you get an inversion to go up. And this really looks like a two-legged pullback, which I used to trade all the time. And then what I was really looking for on this one was a, let's go back to the 1 minute. Early 9 o'clock. I was really hoping to see, I don't know, like a move into 50% here. But this one we did just didn't quite get that. Didn't quite get that. So I felt like we were in discount here. We had this data low slash AM low from the other day down here. But I mean the market's so bearish today. This would have been go to a 2 minute here. There we are. We had a nice 2 minute throw that one wasn't valid. Just now moving on down. So at any rate, not really too many trades during lunch that I saw. We left relative equal highs right here, so I'll go ahead and mark these. And this is actually a lunch high. So we'll mark that. We got lunch high for the day. We had the lunch low down here. Lunch low was taken out, and then we went into the PM session. PM session kind of chopped. I was really hoping to see was I was really hoping to see this data low be taken out, but as you can see, we left a PM low right here. And so this is just one of those ways where the market engineers liquidity. So I'll mark this one out. That's PM low. All right, market rallied from there. We took out the 50% of this move down. And it looks like we left some equal highs right there. And then went back to my demo account and actually I ended up taking a short. I ended up taking a short here. There's this 1 minute right here, which is really tiny. After I saw us take out that that high up here, that one that one I actually entered early on and stopped out. That would have been a decent trade, but price is so sloppy right here. This is one of those times where you know, I was upset about the losing trades this morning, and I was kind of upset about my demo account. So I ended up taking two losses here on my demo account as well after I said I would stop trading. But one thing I see in the market here is like you see these long wicks on everything, and this is like hairy price action when the price has hair on it. It ends up being very sloppy. It ends up being very sloppy. So while this was a decent enough liquidity sweep right here, and we're delivering from a fair value gap, we just don't really have a good inversion here, an obvious inverse there. So I should not have taken that one. And yeah, we're just kind of choppy price action right there versus back here where it's not super hairy. We got these clean inversions, clean fair value gaps. So that's pretty much my day. A bit of a blotto of a day. Not too thrilled with it. Uh, but I've been trading really well over the past few weeks, and this was just not an awesome day performance wise. Things I'm going to work on after this are um, one is just being careful that the model that I see is what I trade. Obvious fair value gaps, looking for obvious liquidity. The long I took up here, there wasn't great obvious liquidity up here. You did have equal highs right there though. So I'm gonna mark these out because we did leave an equal high right there. But it looked like the market was reaching for these this liquidity that it had left over. So looking for that target before looking for the entry, and then just managing the entry properly, especially when it looks like we're going down, but taking one of these reversals, it's just safe to go to break even and to watch the risk management. That's all I can do. I think I did pretty good risk management, exercising my max loss on my evals, which kept those from going down anymore. And I didn't have great risk management on my demo account, uh, but as much as I lost, I mean, I made that back up in a week last week. So and I see these set up all the time, and I'm pretty patient with these setups. So one bad day isn't going to get me down. So hope you enjoyed this, and